welcome to today's tutorial brought to you by To The Tick, and today's topic is the V upside down V top. Now it's a powerful reversal pattern, this pattern, and it is seen in all markets, instruments, time frames, and price ranges, and it can set up a real large change of trend. So we want to understand that it's a very unusual in its structure, it's a very distinctive pattern, and so therefore we want to look at this bar by bar, and we want to do it in the same way that the pattern unfolds. So let's get right to it. First and foremost, we must have a trend in the background before we can have any kind of reversal. And in this pattern, we are looking at an uptrending price action with a particular type of structure. First thing and foremost, when we want to consider a reversal pattern, we're looking for a certain set of criteria before we even talking about a reversal. We have to have that trend, and in this case, it's a bullish trending action. And it's also very aggressive, and the type of pattern structure that's in this background. It's a very tight structure. It's what they call straight line, inline structure. To look for a reverse, we must see something change in our pattern. And the first thing we notice here is that somebody is willing to start coming out and take some profits. Why? Because we change that angle of that steep ascent. That rapid, steep ascent that was running in a very, very tight channel here. In this process, we're looking for where that battleground, once we start getting those signs that they are taking profits out, we start squaring off. To square off that resistance line, square off that support line, and then show me the muddy trench. The spot in the middle where every bar is getting worked in there. Somebody high and low is still coming back into that single tick price perhaps, or within 10 points. The range of this does not matter. It is still the structure within your chosen instrument and what you're looking at. Now, one of the nuances of this pattern is the fact that it is so dramatic in that bullish trending action, because what the V or upside down V represents is that we're going to look for this very sharp turn in trend, and we're going to be looking for it going just as dramatically, equally, and that symmetry is important, and it's part of the structure of this pattern, that it equally looks just as dramatic back on the way down. So the point of the pattern is the drama. It is the spirit of the pattern. And that being said, they are not going to always come out looking like perfect little patterns and rectangles, but they will, by the time you look at it, said and done, you're going to have that nice peak high in this case, and we're going to look at that next, and we're still going to watch where is our establishment of where is that real support and where is that real resistance. Notice that if we draw a channel line here, and let's connect the dot of each bar's low, that is one method to see the sign of weakness. We draw this channel line, it's running a channel line on the top, and you can tell that from this angle now, once you actually start drawing that, you're going to see it flattening out. We're still looking for a mushrooming type effect across the top before we would really look for anything to confirm as a true change of trend. Where is that resistance line? We keep making that new higher high. We just did it again, and now we got a much higher swing low. One of the nuances of the pattern is that tremendous big high spike bar you have. Now, I know traders that trade waiting for a bar like that just so they can have an opportunity to take back a portion of the bar itself. Again, is it a day? Is it a minute? A portion of the bar itself, because it's a great big drama play. Now, that is size. We want to see drama. We want to see everybody that was bullish coming out. And then what comes next? We're always going to be asking that question, what comes next? Every pattern we ask that question. The point is, where on the backside is there enough money to talk about to have you interested? Every reverse consideration is about the spread and price. Is the bar itself, and after all, it might happen so quickly. You got up and went and got a sandwich. took a nature break, and the next thing you know, the highest high for the day, the biggest spike bar of all time, and it's sitting up there and you weren't there to trade it. Does it mean it's over? If it's a big reverse pattern and you're looking for an intermediate, at the very least, or a big change of trend, you will have more options. So please consider that, yes, this is dramatic. It's a joyride. It's a great big roller coaster. Get up there on the top and then watch that big drop and fall. Well, unless you're up there willing to take that risk, the option on your stop is that you are up above that bar. If it's a nice big bar, that is now your risk. So consider the odds. Look to see if you can find some place along the backside that denotes support. And again, they're not always attractive. So we can use this channel line break as the first signal. We can also use those highs that were that early version of resistance, the one with the orange dashed lines, that early form of resistance. We can use the lack of any effort to get back above there, and hence a lot of people call this pattern an ugly head and shoulders reversal. It just doesn't have the time element involved in the turn. It's quick about it. No matter what chart you're looking for a single spike type bar. There are really four options to trade this pattern. The first is to find a place with that thrusting action, and if you're running, for example, with a larger chart and that bar and that thrust represents a great big push into resistance, then that has high odds to be a really successful trade. Well, you might look into an entry there. There are news-driven events where you might have some high odd options, and news-driven events where you want to stay the heck away from it. So the bottom line is it's a drama scenario. So the first aggressive option is to trade something inside that early bar. Realize that your stop option is immediately to that high price on that bar. The next option is to wait for them to pull back into the muddy trench. This is my method, the Lav method. I've never seen it written anywhere else. I didn't take an entry in that big spike, and I'm watching them fail to get back up there. And I watched the bears gain control inside the muddy trench, and once they gained control, whether I'm looking here for that next break into that lower line, which represents a horizontal line, and you may consider that a neckline of support that's been broken from your background price action. The people that were going long are no longer willing to support. Where does it work in the picture for you? And again, the muddy trench and the efforts back and forth. And finally, the next option is to take it as a breakdown trade and actually look for a breakdown entry. And the fourth and most conservative way is to go on and watch the breakdown wherever it will be, where you firmly see that mushrooming effect, and then you're taking it once the breakdown actually confirms. Now, all of those options are viable. They can all work. The conditions of this pattern, or the spirit about this pattern, is drama and quickness. You are looking for that bullish trend background in order to have a reversal, and in this case, it's tight and aggressive in the way that it creates the price action. Then you look for that push into a new high where you start see those sellers stepping in, and it pauses the action, starts slowing it down, the bars start encroaching back on themselves, not creating the same pattern. Notice it changed. A little profit taking, how strong is it? Establish that muddy trench where they are willing to come out. Then you're looking for that swing high to low spread to reverse and repeat. Your target can go all the way up there to that swing high top, and whatever your definition is for the actual break of support. Your stop limit is just above each one of these entry options. The first and most ugly right shoulder area or higher as an entry on that big old thrusting spike bar. Depending on the range in that bar, there may be some nice options in there, as long as you keep your real restrict risk to reward parameters and you have a plan ahead of time. Please don't be caught making a decision in the heat of the moment on a roller coaster. Then you can try that muddy trench price area once you see that those bears are firmly in control. The classic method is to take it once you actually establish the breakdown. It's up to you to decide what's support, where is that breakdown, and finally the conservative is waiting for that retest on an actual breakdown when everybody knows that we're breaking down. And yet that one does not happen all the time, but when it does offer a high rate of return. And again, if this truly turns into a big pattern, work your background price action for each one of your targets on the way back down. The symmetry of this pattern is part of its structure. So thank you very much. That's your tutorial today on the upside down V top pattern, very aggressive reversal pattern. And tothetick.com.edu, we've got video, text description, and I've got chart examples over there for you. Come and join us, learn, subscribe. Thank you, and I'll see you again soon. Bye for now.